Okay, today, Friday, August 2nd, markets are obviously pretty weak with the S&P down about 2%. We wanted to give a state of the union, sort of what led to this position and where we see things going forward. So first, as per the trend spider chart here, we were risk on over 55.15 and our stop was just under 5,500. And the reason we were stopping out at 5,500 is because we saw negative gamma onset under that level, which implied a quick test of 5,400. That happened yesterday, and then the issue this morning was, okay, under 5,400, there's more negative gamma with 5,300, the major support level. That was our put wall. The reason that we flag that as a support level is because often when the market tests that level, we see puts getting closed. So let's take a look and see what actually happened here today. HIRO measures real-time options flows, and if this purple line goes up, that's telling us that positive delta trades are being put on or entered into. And what is positive delta trades? Well, you can either buy calls or you can sell puts. So right here at the put wall, we see a big positive delta response. A lot of that is puts being closed. Now, puts being closed is essentially a short cover trade. People cover their shorts. They do so oftentimes rather aggressively, and there aren't a lot of natural buyers oftentimes in those type of environments. And so those moves can fade rather quickly. So what we're getting here is a pretty strong response. You could see right around 53.40-ish. Those flows have really lightened up. And you can see this in other indices and products as well. For example, IWM, which was pretty heavily sold this morning. We're now seeing some chunky long delta trades come in here as well as that market or as that index, elevates a little bit. Now, what happens looking forward? In our founder's note this morning, we were very clear in saying this is a really nasty setup, and this is about protecting capital here, not necessarily trying to be a champion in timing the dip. And so we will be constructive on getting long equities only when we see a move above 5,400. Now, positions changed often, moves are happening all the time. So the way that things stand right now, we need to see 54.15. We want to see it close above that level. That we think would invite a quick retest of 5,500. As long as we are under 5,400, we are in a sell the rip or short the rip environment in our view. And we're going to maintain that view until one of two things happen. Number one, OPEX hits. That's 816. That's about 2 weeks out. So it's quite a time away. Or number two, we have a very long support level down at 5,000. Obviously, that is a substantial move lower. And so right now, we are really just sort of sitting on our hands, waiting to see, as far as buying, sitting on our hands, waiting to see what manifests. Back to where we stand right here today on Friday. Obviously, we said this is about the protection of capital for people who are generally long stocks. We don't want to be champions here trying to buy dips because of this really tricky situation. There are three major risks. There's the macro recessionary concerns. There is the geopolitical situation with Iran and Israel. And then we have international markets under a lot of pressure. Japan's getting crushed. They're down 10%. And volatility is contagious. It spreads across uh, the globe and also across assets, and that is always a risk. So you have to watch for that. Now, the geopolitical situation is particularly tough because you don't want to be short vol, in my view, if Iran escalates, right? That can really get things pretty ugly pretty quickly. And so I don't know if we head into this weekend that people really want to be short vol. Maybe you want to cash in some of your chips you were fortunate enough to be short or you had hedges on, you want to monetize some of those positions. That's reasonable. But being short vol or really trying to sell this or aggressively buying the dip is a little bit of a different situation in my view. Now, as far as the volatility space goes, these three situations, the macro, geopolitical, and then the international flows are known unknowns, right? Uh, when you have 10% moves in equities or assets, that can oftentimes lead to a lot of problems, margin calls, et cetera. So that can cause the volatility. Obviously, the geopolitical situation, we don't know when and if there's going to be a response. And so those are known unknowns. We know that these are risks, but we don't know when and how they could flare up. That's different from saying, "Hey, NFPs today, I'm going to buy a zero DT option to hedge out that risk." Now, um, back to the volatility landscape. If we look at the VIX, this is the highest VIX since March of 2023 when Silicon Valley Bank went under. If we scroll back a little bit here, we can see in October, this is right around the time of when the Israel, Hamas situation initially really flared up. Obviously, there was a lot of volatility and risks around that, as well as in April, there was another kind of geopolitical flare. So, that is supportive of volatility. And it seems like things have only escalated in our seat. We aren't geopolitical analysts, so we'll leave it there. It is a known unknown now. The second thing is we can see when we look at volatility, this is in our founder's note here, can make this a little bit bigger. What you're seeing here is 1 month skew for December. This is as of this morning. So the green line was this morning, the gray line was a week ago. And what you can see here is the relative lift in put strikes or downside strikes. The implied vol there has lifted a lot more than for call. So this is a real demand for tail hedging, longer dated tail hedging, people waiting to see some of these risks get cleared out, people worried about the future. This is not sort of, hey, we got to protect ourselves against one number. So again, the point here is what is going to clear the risks away to keep a persistent, buy the dip mentality in place. At the moment, we just do not see it. And as a result, we're going to be looking to short rallies here. You can see these deltas rolling over. We think Monday, Tuesday could be particularly nasty. And again, if we break that 5,300 level, the next obvious level of support is at 5,200 and then 5,000, or the timing into 8/16 expiration. So that's how we see things right now. If you have any questions, you can email us at spotgamma.com. Hit us up on Twitter at SpotGamma or X. And as always, please kick the tires on a membership. You can go to spotgamma.com and you get 50% off your first month.